Hello my fellow freedom builders and welcome back to the channel. Today's video is about every trader's dream, I guess. It is how to find the swings in the market. Is it really possible to find the swing highs and the swing lows and try to make money of them? Well, the answer is yes and no. There's no way we can predict the market completely, but there are some tools that can help us at least to determine if we're in an uptrend or downtrend. So today I'm going to show you a bit about how you can do it. I'm going to show you a test portfolio I'm running on the Danish stock market right now that is showing some quite interesting results. And in the upcoming weeks, I'm going to make more videos about this swing trading thing here. All right, first of all, here we have the S&P 500. And as you know, if you have followed my videos the last time here, I have been saying since the beginning of January that we were probably close to the bottom of the market. Now, first of all, remember this, I'm not spotting the bottom of the market here. That would make me a completely trading god if I could do that. No one can do that, to be honest. However, we had a swing up, a swing down, and then when we started to see a swing up again, I said, well, if this bottom here holds, then we are probably in an uptrend. Now, how did I see that? Well, first of all, I'm looking at the weekly time frame here. And remember, right now, we're looking at the S&P 500, which is the largest index, I guess, in the world. And what I'm looking at here, since I'm looking at the weekly chart, is that if we go down on the lower time frames, everything gets more messy. We can go down to 1 hour time frame and everything is just up and down and erratic, chaotic movements. Up at the weekly time frame, everything is a lot more quiet. It's a bit like flying up between the skies. We have a good overview here, and what we can do is that we can spend the time needed to make our decisions. So what I do first of all is I am trying to find the tops and the bottoms. Right here I have marked it. Now there are a ton of different ways you can find these tops and bottoms. There are a lot of indicators right there. Down here I have I think it's the RSI, just the standard old RSI. There's stochastics, there's a billion different indicators. The one I have built here is a bit more unusual indicator. It's more of a statistical thing. Right now I'm running it in a huge Excel spreadsheet, but we are getting it built into the new the new portfolio tool over here at my stock scanner, so you can look forward to that when that is published soon. Now, what I'm doing here is basically just looking at tops and bottoms, as I said. This is a potential bottom. I'll show you in a second how I spotted that. We have our indicator here showing we might be getting close to a top here. And what I'm seeing is that we have a top here. I'm not looking at the wicks, I'm looking at the bottom bodies of the candles. And since this one is going up here, and we are forming a potentially new top here, well, we might get down for a while. But since this one has made a new higher top, then we are in an uptrend. So that is what I'll be looking at. Normally, I am not shorting stocks. So when I see something like this indicating a potential top, I will be waiting. And that might be for some weeks until I see a potential bottom forming. And then I go over into single stocks. You can use this on an indice level. But basically, what I'm doing here is that when we are seeing a higher top, I know that we are in an uptrend. Then I wait for potential bottom forming, and we saw that here. And then I go over to the stock market. Let me show you that in a second. So that is the basic of it. That also means that, for instance, I should say back in 2020, this is actually the first bear market ever where we didn't get a warning with lower tops and lower bottoms before. This one just went from an all-time high to a very, very low level. I didn't spot that bottom here. However, we had a very strong leg up, then we had a swing down, and around here, that was in June, July, I said, if you are going to invest, this might be a good time. Well, if you didn't invest here, of course, you missed a very large leg upwards, but you were able to find some very good stock picks here, again here, and all the way upwards in this trend. When we came up here, we got a definite good swing down here, meaning that what I said was, that was back in February 22, saying this might actually be the top of the market. This was before the war. Not many actually believed me when I said this. We saw a new slightly higher top here, but then it went straight down, making new lower lows. And it was actually first here back in January 23 that we both had a higher low and a higher high, indicating a clear uptrend. Now, what am I looking for then? You can do a ton of different things. Many people are looking at moving averages, meaning that they might be looking for these swings, but if they're looking for bullish swings, they are only looking at it, for instance, when the weekly S&P 500 here is above could be a 50-week moving average. That's about a year, that's close to 200-day moving average. So many people, many investors are looking at the moving averages here and saying, okay, we're looking at the swings all the way up, but when it breaks down through the 1 year moving average, we start to look at the bear swings. And you can see it went up here through the 1 year moving average, and it might have been time to start looking at some uptrending swings. Also, what I'm looking at is the candles, and I would say that the higher the time frame we are looking at, the more significant the candles are. Because if we're looking at a 15-minute time frame or an hour time frame, it is possible to manipulate the market so it shows some different candles than it otherwise would. But what I'm looking at is, for instance, pin bars, meaning small bodies with very large wicks here. As you can see, this one clearly indicating an upswing. It didn't last long. Then the other thing I'm looking at is engulfing patterns, and that is where we have one candle. Let's just enlarge this a bit. We have a green candle here, and then we have the next candle where the body completely engulfs the prior candle here. So you can see the red body here starts higher than this one and ends lower than this one, meaning it tells us, well, the buyers were in control just for a second and then it was being shot down. So that is also what I'm looking at. If you're into candlesticks, this is also a classic top formation, a strong green candle. What is called a doji here, with almost the same starting and ending point on the body, and then some very large wicks, and then we saw a bearish engulfing pattern. This one alone just told us we are probably going down here, and when that occurs at the same point where we've had a former low, that is definitely something I'm looking at, saying this is not a safe place to invest, let us get out. Now, what we look at, or what we find when we look at the statistics for the market and for single stocks, is that when we're looking at what defines the price movement of a single stock, we see that about 60 to 70% of a stock's movement, just a random pick stock, 60 to 70% of what is the price movement of the stock over a year is defined by the movement of the underlying stock market, meaning that not many stocks are racing upwards if the market is crashing. So the trend of the market is very defining of where the stocks are moving. Then there is about 15 to 20% of the movement that is defined by the sector. If it's a very strong sector like energy has been for a long while, then the energy stocks are also being pushed up just because the energy sector is very positive. And then there are the last percentage, somewhere between 10 and 20, 25%, depending on what science you're looking at, what papers you're looking at. Then the last percentages are defined by the stock itself, the earnings, guidance, and so on and so forth. So what I have been trying, and what I will let you follow in the upcoming weeks, is that when I find these swings, and when we are saying, okay, here we are definitely at a point where we would start looking for some swings, Then I go over into the stock market and I try to find stocks that have the same anatomy, the same structure, that also shows a bottom of a swing, because I know that if the market starts to lift up in a swing, that will automatically lift a lot of stocks as well. And why not pick the stocks that are in the same swings as the market? I can show you here. I've tried it in the Danish stock market since the 1st of January. Some of this is back tested, done in the rear view mirror. That was some around the beginning of April here, and the rest of it has been by actually live paper trading, you can call it, just testing it. And what we can see here, I didn't use the S&P 500, I used the Danish OMX C25 here. And when the market got ready to move upwards, if we're looking at it here, let's just find the Danish market. When the market started to get ready to get an uplift, it was allowed for me to buy stocks that had the same structure. When the market were getting ready to sell a bit off, I didn't sell my stocks. I had a stop loss on them, so if they broke that, I sold it. But I were not allowed to buy any more new stocks until we got to a point where this indicator indicated an uptick again. So what are the results? Well, what we can see here, let's just have a look at the monthly here. What we can see is that we have actually been profitable every single month, which is amazing in a market like this. We have made a total return of just below 14%. Great Sharpe ratio, and just be aware this is only about 5 months worth of data, so there's nothing really significant we can get out of these numbers yet. We have a max drawdown of 4.4%, about the same volatility as the market, so overall this is actually looking fairly good. This is the overall C25, so you can see it has been a positive year in the Danish market here, of course. So what we can see here is that we've had a very good, nice uptrend here. We can see the drawdowns have been quite controlled. And what I'm going to show you in the upcoming videos is how I'm trying to find the right stocks to move into when the market tells me that it's time for an upswing. I hope this was somewhat inspirational for you. And as I said, I will be back with a lot more videos about these swing trades. Often these trades are somewhere between 1 and 2 weeks and up to 5, 6, 7 weeks in duration. So it is fairly short term, but again, it's not day trading. It's not from day to day. It is something where we can hold shares and stocks if they are continuing an uptrend. I hope this gave a bit of inspiration. I'll be back shortly with more videos. And until then, take care of yourself and your money out there. Bye for now.